Crowdstrike stock is down over 6% in the aftermarket hours on Thursday, June 3rd, following the company's earnings announcement. However, zooming out, Crowdstrike stock was already up over 42% year to date in 2025. So this pullback just could be a retracement from the company's rapidly increasing stock price. That being said, the board of directors did approve a share repurchase program of up to $1 billion of CrowdStrike's common stock. I always like to see share repurchases approved by the board of directors. It's a good sign to me that the company's management team believes the shares are undervalued. It's not the only reason why a company will return capital to shareholders. Sometimes it's because they have so much money and they don't know what to do with it. They don't have any other use cases. And so they start just buying back stock to return capital to shareholders. But there's other ways they can do that. They can pay out a special dividend. They can start a regular dividend. They don't have to repurchase shares. So when they do that, it sends a signal to me that they think the shares are undervalued. So the outlook wasn't all that great for the second quarter and the fiscal year 2026. That's what investors are a little bit concerned about, but I didn't see that as a big negative. The company's forecasting revenue of 4.8 or 4.75 billion for the fiscal year 2026, which would still be considerable growth from fiscal year 2025, with solid non-GAAP operating income of around $1 billion on revenue of around $4.8 billion. All right, so valuation, I think, was the major reason why the stock price is down following the earnings release. I mentioned at the top of the video that the stock was already up over 40% year to date in 2025 and is trading at a forward price to earnings of over 141. Furthermore, when I calculated the value of this business using my proprietary discounted cash flow model, I found the shares to be overvalued as well. I calculated an intrinsic value of $189. The current market price is $489. So it looks overvalued. So I mentioned that I did not have CrowdStrike stock rated as a buy this year. The last update I made on CrowdStrike was on May 1st, where I rated the company as a hold. And of course, I mentioned that it's already up over 40% year to date in 2025. So I missed out on this business because I looked at valuation, and it turns out the market ignored the stretched valuation and continued to bid prices higher for CrowdStrike. Regardless, I still feel this business is overvalued, and I'm going to keep the stock rated as a hold.